Hello and welcome to Matthew Douglas.
It's August, it's hot, and it's another challenging year. We have high inflation eroding our savings, and we're still waiting for stock market growth to come to our rescue. So how did we get here? And what does the future hold for pensions and investments? With hindsight, perhaps the correction was inevitable, with fiscal stimulus across the Western world to mitigate the risks from the pandemic. The truth is, closing market economies makes them less productive. When they're less productive, they make less profit, and the share price tends to fall. Western governments have tried to mitigate this through quantitative easing, but the inevitable consequence is high levels of inflation. Throw into the mix a European war, and inflation rates have been persistently above 10%. And yet, there is still cause for optimism. This is not the wage price inflation of the 1970s, but to do with the scarcity of resources, be that Russian gas or Chinese electrical components. Wages lag behind prices at present, but this will not suppress share prices in the longer term. The short-term shock of inflation is inevitably followed by the raising of interest rates, which tends to have the effect of reducing share price as the cost of debt spirals. In the medium term, however, companies tend to increase their prices to mitigate any losses from profit. Therefore, shares will tend to recover, particularly when inflation starts to reduce. The biggest unknown we face today is the risk of recession and the effects this could have on consumer spending. Our role as your financial advisor is to identify the winners amongst the stocks and the fund managers who can identify which companies have the strongest margins and the most robust business models. History would show that in times of economic hardship, the best way to protect private wealth is by investment in stock markets. This makes people who are asset rich wealthier, which tends to generate private income, which then employs the wage earners of today and the wage earners of tomorrow. In the UK, we will shortly have a new Prime Minister, and I'm sure we'll look back on 2022 as a very challenging year with a lot of geopolitical realignment. But it's fair to say, wherever there is change, there's usually opportunity. And our role as your advisor is to concentrate on those small things that we can influence, but also recognise the things that we can't. But whatever happens, rest assured, whilst this has been a challenging year, I have no doubt we will shortly be returning to growth. It only remains for me to say thank you for your patience during 2022 from everybody here at Matthew Douglas. We look forward to a somewhat prosperous end to 2022.